Institution-Wide Risk Assessment Framework. An institution-wide risk assessment, IWRA, is the foundation of an effective anti-money laundering and counter-terrorist financing, AML/CFT, compliance program. The purpose of the assessment is to identify, evaluate, and understand the money laundering, terrorist financing, sanctions, and other financial crime risks faced by the organization. Regulatory bodies and FATF emphasize that AML programs should be risk-based and tailored to an institution's specific risk profile rather than relying on standardized controls. A comprehensive IWRA enables management to allocate resources effectively, prioritize higher risk areas, and design appropriate controls. The assessment should be periodically reviewed and updated to address emerging risks and changing business activities. Components of an institution-wide risk assessment. The CAMS framework identifies 4 primary risk categories that should be evaluated during an institution-wide risk assessment: customer risk, geographic risk, product and service risk, and delivery channel risk. Customer risks may include politically exposed persons, cash-intensive businesses, non-resident clients, or complex ownership structures. Geographic risks involve countries subject to sanctions, corruption concerns, weak AML controls, or terrorist activity. Product and service risks include private banking, trade finance, correspondent banking, and anonymous transactions. Delivery channel risks relate to non-face-to-face onboarding, intermediaries, agents, or digital platforms. Together, these components provide a structured model for assessing inherent AML/CFT exposure. Identifying and managing unmitigated risks. An institution's risk assessment should identify not only existing risks but also residual risks that remain after controls are applied. When a scenario reveals unmitigated or inadequately mitigated risks, management must take prompt corrective action. Appropriate responses may include implementing additional controls, enhancing customer due diligence procedures, increasing transaction monitoring, restricting certain products or services, escalating concerns to senior management, or terminating high-risk relationships when risks cannot be effectively managed. Regulatory expectations emphasize that identified risks should not be ignored or accepted without proper justification. Effective risk management requires continuous evaluation, documentation, accountability, and proactive remediation of weaknesses before they result in compliance failures. Risk Mitigation and Control Application Model. The CAMS risk mitigation model follows a structured process of identifying risks, assessing their significance, implementing controls, evaluating effectiveness, and monitoring residual exposure. Controls should be proportionate to the level of risk identified. High-risk customers or activities may require enhanced due diligence, increased monitoring, additional approvals, and more frequent reviews. Lower-risk relationships may justify simplified controls. Institutions should document all risk assessments, control decisions, and remediation efforts. Ongoing testing and independent reviews help determine whether controls remain effective. The goal is not to eliminate all risk but to reduce exposure to a level consistent with the organization's risk appetite and regulatory obligations. Institution-wide controls and record-keeping requirements. AML/CFT compliance programs rely on a combination of preventive and detective controls designed to identify and manage financial crime risks. Key controls include customer identification procedures, customer due diligence, beneficial ownership verification, sanction screening, transaction monitoring, suspicious activity reporting, and employee screening. Record keeping is equally important because regulators require institutions to maintain documentation supporting customer identification, transactions, investigations, risk assessments, and compliance activities. Accurate records provide evidence of compliance and support law enforcement investigations. Institutions must ensure that records are complete, accessible, secure, and retained for required periods in accordance with applicable laws and regulations. Applying controls, record-keeping, and mitigating factors. When evaluating a scenario involving institution-wide controls and mitigating factors, AML professionals should consider how controls interact to reduce overall risk. Effective application requires aligning controls with identified risks and ensuring that policies are consistently implemented across business units. For example, customer due diligence supports transaction monitoring by establishing expected account behavior, while sanction screening helps prevent prohibited transactions. Record-keeping supports investigations and regulatory examinations by preserving evidence of compliance activities. Mitigating factors may include strong governance, experienced compliance personnel, independent testing, advanced monitoring systems, and effective escalation procedures. Together, these elements create a comprehensive framework for managing financial crime risks. Importance of targeted AML/CFT training. Training is a critical component of an effective AML/CFT compliance program because employees serve as the first line of defense against financial crime. The CAMS framework emphasizes that training should be risk-based, role-specific, and tailored to the responsibilities of different audiences. Generic training may provide foundational knowledge, but targeted training is necessary to address unique risks associated with specific business functions. Employees must understand relevant laws, internal policies, suspicious activity indicators, reporting obligations, and emerging threats. Effective training strengthens compliance culture, improves detection capabilities, reduces operational errors, and demonstrates management's commitment to regulatory compliance and risk management. Delivering targeted training for different audiences. Different audiences require different levels of AML/CFT knowledge and training content. Frontline employees should focus on customer identification, red flags, and escalation procedures. Compliance staff require advanced instruction on investigations, suspicious activity reporting, sanctions compliance, and regulatory developments. Senior management and boards of directors should receive training on governance responsibilities, risk assessments, regulatory expectations, and oversight obligations.